It's your favorite homegirl, Keisha Willingham, aka Keisha with the Keys. And today we are going to have the Keys Academy Homebuying Seminar held here in Texarkana, where we are going to educate future homeowners on what it takes to become a homeowner. So the Keys, knowledge empowering your success to homeownership.
Good morning. How are we doing? Good. All right. Well, first of all, I want to thank you all for being here. I know it's a Saturday. It's the weather's kind of uffy, yucky. So thank you so much for coming in and taking time out of your day, out of the weekend. My name's Millie Serrano. I'm with Red River Credit Union. I've been with Red River almost 4 years in March, but I've been in the banking industry for almost 20 years. Been doing mortgages since 2017. Started with Wells Fargo and then moved to Red River. Okay. And I want to go over the documents inside this folder real quick. And we're going to talk about the flyers that you have inside this document. So you have the 3% down flyer that we're going to talk about. You should have the Help Program 2025 flyer. Some vocabulary words regarding mortgages. It's front and back. The back portion has very important information. Assistance at the bottom if you ever need assistance once you already closed on the mortgage. And then we have just an example of a loan estimate. Okay? So we're going to cover these documents as we go through. All right, so the first step to buying a mortgage is complete the application. That's the very first thing that you want to do. You want to know up to how much you can qualify for before you actually go out and start shopping and talking to a realtor. They want to see that qualification letter or pre-approval letter to make sure you're a solid client. And also, you don't want to undershop. So let's say you qualify for a bigger house. You don't want to go look at something, under your budget or over your budget. So we want to make sure that you're exactly where you need to be at. The step two is, once you're qualified, you're going to start shopping for the house. That's when you partner up with your realtor. And then once you put a contract in, then you're going to get ready to buy the house. You can make an offer. You can negotiate, do the inspections. And then lastly, once you close, you're going to maintain the home. So we're going to go in details, step by step, with each of those. All right, so first thing, the qualification or pre-approval, what does it mean? So to be pre-qualified, it means that the lender is only taking your application, your information that you completed, and running your credit. That's it, okay? So we're basing income and assets upon your word. Nothing's verified. Pre-approval is more solid. It's a commitment from the lender because they already verified your income and they verified your assets and ran credit. So it's a more solid letter, and that's typically what the realtors want to see. They want to see something solid, okay? Something that can back you up and say, hey, the lender already reviewed my income and reviewed my assets, and I'm good to go, okay? Questions on that? All right, so in order to get qualified, what do you need to do? You need to submit the application. If you want to apply with Red River, you can do it online. You can go in person. We can complete it in person, pick a paper application. We can do it over the phone. There's different options available. You do need to provide proof of income. This is something that all the lenders require. So we want to see a 2-year employment history at your same job or in the same job field with no gaps. If there's gaps, we need a reason. We need a letter of explanation. So typically, it has to be like medical problems. The reason why there's a gap, if it's you were just staying at home, be a stay-home mom, or whatever the case may be, we do need the 2-year history, okay, consecutive 2 years. Some of the things that we ask for are pay stubs. If you're a W-2, we need pay stubs. most recent 30 days, your W-2s for the last 2 years. If you are 1099 or if you are self-employed, then we need tax returns. All the pages, all the schedules for the last 2 years. If you were under a W-2 employee and then they converted you or you changed jobs to a 1099, we need a 2-year history of receiving that 1099. So we need two full years of tax returns, okay? Then provide the funds for down payment. That's typically when we ask for bank accounts. That's the reason why we ask. We want to make sure that you have the funds for down payment and closing fees. There are some help out there, some grants available for first-time home buyers for what they call heroes, like police officers, firefighters, teachers. There's different assistance out there available. You just need to do a little bit of your research or ask different lenders. Different lenders offer different things that they partner up with, okay? And then credit. What do we look at the credit? So we look at the credit history and your credit score. Your credit score will entail your interest rate. The higher your credit, the lower your rate, okay? Credit history. So if you have recent collections, late payments, judgments, liens, it's going to be really hard to get a loan, get a mortgage loan. So that's some of the things that we look at. And when we say recent, that means within the last 3 years, okay? If there's liens, those have to be paid. If there's judgments, those have to be paid as well in full before we're able to do the loan, okay? All right, so the different type of loans that are out there. We have the government guaranteed loans. Most of you are aware of the FHA. Typically, it's for first-time home buyers. With this government loan, it's 3.5% down. There is an upfront mortgage fee that you have to pay. It is financed onto your loan. And then you have to pay a monthly, what we call PMI, private mortgage insurance. Are you guys familiar with PMI? No? So PMI came into place back in 05, 08 when that recession hit. Several people lost their houses. So lenders had to foreclose several properties and they filed bankruptcies. So the government implemented that PMI to protect the lenders. In the event that another recession were to hit, the lenders were protected. So what does that mean to you? That means that the borrower is paying for that insurance each month, unless you put 20% down. If you put 20% down, then you don't pay for that. It's not a set amount, it's a percentage, depending on the loan amount, depending on your credit, depending on your down payment. So there's different factors that go along with that. It doesn't protect you. It doesn't protect your house. If you can't make a payment, several people have a misconception that if you are not able to make, a payment, that the government will make that payment for you. No, that's not the case, okay? So it's only there to protect the lender in case they have to repossess that property, okay? So USDA is also a government loan. It's for rural property areas, so that means that the house has to be located outside the city limits in order to qualify. And there's income limits, so you have to be considered low income as well to qualify for the USDA. It is 100% financing, no down payment. There is, because it is a government loan, there is that kind of like the upfront mortgage fee that you pay with the FHA, similar. It's a guarantee fee. It's a percentage that you'll have to pay and it's financed into your loan. So your loan amount will be higher than the sales price. And then each month you'll have to pay a guarantee fee as well, again to protect the lender, okay, in case they have to repossess. And then you have the veterans loans. That's a great program. If you're a veteran, we highly recommend the VA loan. It's 100% financing. There's no guarantee fees, no PMI. There is a funding fee. Unless you are disabled, then you'll have an exemption for that and you won't have to pay for it, okay? Typically, VA loans, the interest rates are a little bit lower than any other loans out there, okay? Conventional mortgage loans. So with a conventional mortgage loan, this one is a more solid, higher credit history in order to qualify for it. The debt to income ratios are a little bit higher than going USDA or going VA or FHA. So you have more room to play with and get approved for a little bit of a higher amount than going with a government loan. The down payment on a traditional conventional loan is 5% down payment minimum. You will still have to pay that PMI unless you pay 20% down, okay? Red River offers a conventional loan. So you have that flyer that we talked about, the 3%. This is our product that we offer. It is a conventional loan. It's only 3% down, so it's lower than the FHA down payment. We don't charge the upfront mortgage fee, and we don't charge that PMI. So you don't have to put 20% down to avoid paying that mortgage insurance to protect the lender. Red River takes full responsibility of the mortgage in case they have to repossess, okay? So there's no mortgage insurance. Conventional loan, we can do fixed or variable rates with this program. And it has to be your main primary residence. So that means that you have to live in this property, okay? It can't be for someone else in order to obtain the loan, okay? We do not have co-signers on this one. We don't allow co-signers. Only if that co-signer is going to live in the house. So we have a co-borrower, okay? So whoever's on the application, they all have to live in the property in order to use their income and their credit, okay? Questions on that loan? Okay. All right, so what does your mortgage payment, what does it include? So it has your principal, which is the amount that you borrowed, and then your interest. And your interest is charged daily. I don't know if you notice, if you have a vehicle loan, each month that you make that payment, you're not paying each month the same amount of interest as you did last month. And that's because your balance, your principal balance decreased. So each month you're paying less and less interest. Same thing works, with the mortgage. So that's included in your monthly payment. Property taxes is included in your monthly payment. So what we do is we grab your 12-month property taxes bill or amount, and we divide it by 12, and that's how much we calculate to collect each month. Same thing for homeowners insurance. So this is something typical that it comes with your mortgage payment, unless you do a government loan or the traditional conventional loan, then we'll have to include that PMI, that private mortgage insurance, on top of all of this, okay? All right, so once you have that pre-qualification or the pre-approval letter, you are ready to shop. The lender will give you a checklist of any other documents that they might need moving forward once you submit a contract. They'll go over the financing process with you. They'll go over the loan estimate, which is a 3-page document. You do have a copy or an example of a loan estimate in your packet. You're going to receive this once you get pre-approved or pre-qualified. And in this loan estimate, it gives really good details of the amounts, everything that's being charged, okay? Another thing is to make sure you ask questions, okay? If you can't remember, write them down, call your lender later, or stop by. We want to make sure that you are 100% sure of what you're doing, okay? And this purchase is, it's a really important purchase, and it's one of the biggest purchases that you'll ever make. So we want to make sure that you know exactly what's going on. All right, so let's go over the loan estimate real quick. So if you noticed, on the right side, it has the loan term, the purpose, the product, loan number, and the rate lock. So one of the things that I like to go over with my customers, I go over in detail with the loan estimate, but I want to make sure that the rate is locked in, okay? So once you submit a contract, that's when the rate's locked in. So if the rates, right now the rates are going up and down. So if you submit a contract to me today, we'll go ahead and lock it in because we don't know what the rate's going to do tomorrow, okay? So we want to make sure that that rate's locked in. So pay attention to that whenever you submit a contract and you get a loan estimate. Make sure that your lender locked in your rate, okay? And then the loan type. You want to know what type of loan you're getting, whether if it's an FHA, a USDA, VA, a conventional. You need to know what type of loan you're getting, okay? And then the rate, if it's fixed or variable, okay? And that's very important as well. In this case, it is a fixed rate. So we're looking at a purchase on the left side. If you look at the bottom below the address, it has a purchase price of $220. Okay? In this instance, this borrower is putting 3% down, which is $600. So that brings the loan amount down to $213,400. Okay? And then we have the rate, 6.875. Your principal and interest payment, since it is a fixed rate for 30 years, that payment will not change. Your principal and interest will not change for the 30 years. Your bottom number will change once we add property taxes and homeowners insurance each month. That will change every year. Taxes and insurance changes every year. So your bottom number each month at the end of, or each year will change, okay? Because of property taxes and homeowners insurance. And what we do whenever you make your payment, we'll collect your principal, your interest, and then taxes and insurance will deposit it into an escrow account. So when they come due each month, we'll just draw the money from there, cut the check out, and mail it to the county or your insurance agent, okay? In this instance, the estimated closing fees is $10,510. And then the total amount that the borrower needs to bring with down payment and closing cost is $15,510. So it looks like they're receiving some sort of seller credit or the earnest money. So the earnest money that you put in with the contract is deducted from your fees. So we'll subtract that from your fees. On page 2, it has the breakdown of all of the fees, okay? What all is included, and I'm just gonna go over it real quick. So it does have the appraisal fee. It has the lender fees, the origination fees. Typically, lenders charge 1% of the loan amount for originating the loan. Red River waives that if your credit is 700 or greater. So if you have a credit score of 700 or greater, Red River waives the origination fee. You only get charged the administration fee, okay? So some lenders charge origination, administration, processing, and underwriting. We only do the administration fee and origination depending on your credit, okay? And then on part B, you'll have the things like credit report, appraisal, verification of employment, anything that is conducted or that we don't do. Some people, let's say they're retired, so we don't have to do the verification of employment. We won't charge that, okay? However, we do have to disclose it up front. We always have to disclose worst case, okay? And then part C is all of the title company fees. Title companies is part C and part E is the recording and transferring of the deed. Letter G is your what we call the prepayment. So we do have to collect 1 year upfront of homeowners insurance. We have to pay that the day of closing. You shop for your own insurance, okay? And then we collect a cushion, 3 months cushion to keep in your escrow account. In the event that insurance increases the next year, hopefully we have enough to cover that increase, okay? And then property taxes, those are prorated. So you'll pay property taxes starting from the day that you close. You'll get a credit from the seller because they are responsible to pay up until that time, okay? And then the title insurance, that's the, typically the seller helps pay for the title insurance and survey. Sometimes that's some of the things that we commonly see on the contract, okay? The last page, page 3, gives a comparison. This is only if you pay the exact amount, not a penny extra towards the principal. So in this case, in this scenario, in 5 years, what they have paid in principal and interest is $89,464. Okay? Questions on the loan estimate? All right, so at closing, once you are qualified, we go over your loan estimate, you have a contract, what to expect at closing. So from the day that you submit a contract up until the day of closing is about 30 days, okay? So there's a lot that goes into it. So if a survey needs to be done, that takes time. Appraisal takes time, about 2 to 3 weeks. title work, we do a title search. That's very important. The title search will let us know if there's any judgments, any heirs, anything out there that can prohibit the transfer, the clear transfer from that deed from the seller to the borrower. Okay? So that's very important to do. So that's why it takes about 30 days from start to finish. So at closing, you'll receive a closing disclosure, very similar to the loan estimate, but it will have your final numbers. Okay? It should be less than what we started at the first meeting or with the loan estimate. That final number should be a little bit less than the loan estimate. You'll receive your initial escrow statement, how much is going to be paid or expected to pay in taxes and homeowners insurance, and how much we're going to collect each month for that. Your promissory note, it'll include your amount that you're borrowing, your interest rate, the term, and your monthly payment. Payment information, this is the first payment letter you'll receive when that's due, and the breakdown, how much is going towards principal, interest, and then taxes and insurance. And then your security instrument, this is the one that's going to be recorded, simply says that there will be a lien on your property until it's paid in full. All right, so the last step is the closing of your home. And this is when the loan actually becomes final. The funds, the title company will distribute the funds. They'll pay insurance, they'll pay the seller, whoever they need to pay, they'll distribute those funds out, okay? And then once we're done, you become a homeowner, okay? There are assistants out there. So for down payment, I want to talk about the one that we offer, okay? The HELP program. So this is for 2025. It'll start January 1st. This year, we ran out of funds, so it's first come, first serve. Once the funds run out, we can't use them anymore, okay? So this year, they ran out in May. Last year, they ran out in September. So we're trying to get the word out soon for 2025, okay? So what it is we partner up with the Federal Home Loan Bank in Dallas. They provide the grant. Once you qualify for the loan, then we'll see if you qualify for the grant. It's for first-time home buyers, low-income families, okay? So that depends. They give us income limits, so it's going to depend on the number of household people and then who all is working in your household, whether or not you qualify for the help. It's $20,000 for down payment and closing costs. Typically, you don't need $20,000 to cover all of it. So what we do is we use, after we use or estimate the closing fees, the remaining we put it towards your down payment. That will decrease your loan amount and your monthly payment, okay? So we try to use the $20,000 per person. That's what I'm trying to say, okay? So it is a grant. There are restrictions. You do have to live in the property 5 years, and without refinancing it during that first 5-year period.
We have to do what?
Live in the property for 5 years. If you don't live in this property for 5 years, or if you refinance it within the first 5 years, then you'll have to pay some of that money back, okay? So we always recommend just, year 6, do whatever you want to do, okay? There is a home buyer course that you'll have to take. With that, it's free, and we'll give you the, it's online as well, so we'll give you the details once you submit the application. The other programs that are out there, we just partner up with the city of Texarkana, Texas. So if you buy a property within the city limits of Texarkana, Texas, there's also assistance for closing costs. They might help with some of the down payment, is what she was telling us, but they do pay all of the closing fees, okay? It's also for low-income families and first-time home buyers. So those are the two that Red River is doing right now. I know there's other lenders out there that do different assistance programs. I highly, recommend you shopping around and talk to them and see what's best for you. Okay, I also included in that folder the what not to do list. Okay, it should be stapled on the pocket folder. Should be stapled on one of the pockets. Okay, so we highly recommend once you get approved and you submit a contract to us, make sure you don't do anything with your credit. Okay, make sure. We had an instance happen where right in the middle of the transaction, we're processing the loan, we're getting it ready to close, and they decided to get married. So make sure you don't change your marital status, between when we're, right in the middle of the loan process, or get divorced, okay? So you need to do that before you actually submit a contract and we start working on the application, okay? Very important. Don't change bank accounts either. Don't close your bank account and move it somewhere else. We need paper trail. Don't get a new loan. Don't max out your credit cards. Because all of that, once we get ready to close, we have to run a soft pull credit. If there's any new debt, if your credit cards are maxed out, you might not get the house anymore. So we don't want that to happen. Okay, so just be very cautious with your credit. Any questions that you have, make sure you call your lender first before you go out and shop for a car or whatever the case may be. Okay? All right, so questions for me?
Yeah.
Yes, ma'am.
So what if I'm gonna marry somebody that I need him? I need his credit. I need his money. I need him.
Yeah, we can do that if you already know before you're actually starting to shop for a house.
So make sure he got
Yes.
his credit and stuff,
Yes.
the money.
Yes.
Okay.
Yeah. That should be one of the things that when you're dating.
I have a question about
Yes,
the
ma'am.
HELP program.
Yes.
Does this only apply to down payment assistance and closing costs? Because-
Yes.
Okay, so okay.
What?
So it's like, cause she's first time home buyer,
Mhm.
so she did like the USDA loan and they covered the closing costs. It couldn't apply toward like the principal or anything like that?
So with I have to check with Federal Home Loan Bank, but what we have been doing, because we use, like I said, most of it towards the down payment
Mm-hmm.
and just however much we need for closing. So if that's the case, I don't think we would have a problem with that. I'll just have to check with Federal Home Loan Bank.
I
Since
did a
USDA
USDA loan with my
Mhm.
house and I didn't have to do a down payment.
Yeah, because it's 100% financing.
Yeah,
So I'll just have to check with
okay,
Federal Home Loan Bank and make sure that's something that we can do with the USDA.
okay.
Okay, so typically it's for any other program that requires a down payment.
Okay, okay.
On that first, on that 20,000, did you say 20?
Yes, ma'am.
On that, can I be a second time homeowner? Do I have to be a first time? It's only homeowner.
First time home buyer. So what that means is that you cannot own any real estate within the last 3 years, even if it's land.
Oh, you said 3 years,
3 years.
but 5 years and 4 years, I'm good.
Yep.
Okay.
Yes, I'm glad you asked that question.
I asked a lot of questions.
Good, good.
I just have one question.
Yes, ma'am.
It's about the credit. So do I need to have this like credit cards, all these credit cards I got, someone I need to have it stable for a whole year and don't, just pay them off
Mhm.
and just let them sit there for a whole year and don't buy them don't mess with them before I buy a house? Or is it 6 months? Like if I need a Marcus, if I have a $10,000 credit loan, right?
Yes.
And I got it almost maxed up to 10,000. So I know I need to get it paid down, so do I need to get it paid off? Or just?
You don't have to pay it off,
Oh,
as long as you owe 30%, because otherwise your credit's gonna be low now.
Okay,
If you max out your credit cards, your score's gonna go down.
yeah,
So we always recommend have it about 30% of the available credit that you qualify for, okay? If you have it within that 30%, your credit's gonna be up and you will be good.
So what is y'all, very pretty.
Yes, ma'am.
So what is y'all projected, like, just give me a projected number for this, like, credit score? You do 510s, 6s?
Typically, when they have anything below 600, it's either because they have recent collection accounts,
Mhm,
judgments,
mhm.
We have seen every once in a while that it's only medical bills. If that's the case, we can still help them.
Y'all don't care about the medical, do you?
Yeah, we don't care about the medical bills. Yeah, yes. Yeah, so we really like to look at the credits, not credit score, but the credit history. Okay, see what's out there. Okay.
I have a scenario
Yes,
that
ma'am.
I want to talk about because you said something about don't get married, don't get divorced. Well, I have another example. I had a client, we were about to close, and he was married, but him and his wife had been separated forever, like years, like 12, 13 years. They had been separated, but they never went through the process to get the divorce. So up until the time it was time to close, she was like, oh yeah, I'll sign. You know, and she had to sign. It was in Arkansas. She still had to sign at closing, and then some kind of way I think she would sign off the deed later or something. I don't know. But 2 days before closing, she told him that she wasn't signing. He was about to move his girlfriend in the house, and she signed off. And she did not sign. We didn't close. So.
That has to be done before they start the loan process.
But she was saying the whole time, you
Yeah.
know, I'll sign. So we were like, okay, you know, everything was good. She was real positive about everything. And then when it came time to close, she did not close.
She thought that.
I mean, she did not sign. Yeah, she didn't sign. We didn't close. And yeah, so.
We have had some of
Yeah,
those.
something like that too?
Yes, ma'am.
Yeah.
So we always, when they tell us up front that they're separated,
Yeah.
we're honest with them, you know, they have to sign off, they either have to
Yeah,
sign
we
off their
told- we
interest
told that.
or they have to be on the deed.
And she agreed, and then right before closing, she didn't sign, so we
Yeah.
didn't close. Yeah, so that's something to think about too.
Yes, so I had an incident too where my borrower was right in the middle of a divorce. Well, it's not finalized and it's not recorded. So we always recommend, hey, just wait until that divorce is recorded. So it has to be finalized and recorded before we can even, otherwise the spouse has to sign off on the deed or give up their rights. And some of them are like, I'm not gonna giving up my rights. If I have money, you know, with that property later on, why would I give it up?
Yeah.
So, yes,
And then I've also had someone who lost their job in the process,
yes.
was not honest with me or the lender, and I guess thought that she was gonna be able to just go ahead and close. And, you know, they do verify employment prior to
A few
close.
days, that's
Yeah.
right. That's
We
right.
didn't close on that one either.
So
Yes.
what about, okay, check this out. I've been, like, let's just say I've been in school for 2 years. I'm about to be just that, but I'm about to get my degree and stuff. Do that count as work history?
It
The
can.
River?
Yes, ma'am, it can. Here's the thing. So, if I'm going to school to be a teacher, and I graduated, you know, last year and got my diploma, but I changed my mind, I don't want to teach anymore. So I went and worked on a different field. My degree is in teaching, but I'm working doing something different. It doesn't count. If you were in school to be a teacher and you just now got a job as a teacher, then yes, we can use that as 2 years.
So therefore, I don't necessarily have to be employed.
That's right.
You're gonna count my transcript
Mhm.
as employment, and all I gotta do is show you that I just got this contract with the school, and bam, I can get.
That's right. That's right. Yes, ma'am.
I didn't know where it really do. I know other people do it, but I didn't know where it do.
Yes. Yes, ma'am, we do. Any other questions? No?
Y'all count jail too? Certain, it depends on which mortgage, but they count jail. You know, you be working in jail. They count it. I just checking.
I would have to run that with my supervisor. I haven't had a scenario with that instance, so I wouldn't know.
Work release and stuff like that.
Yes, yes, yes. Yes, ma'am. Well, my contact information is up here. We do have a full bilingual team. I'm bilingual. We have the processor and the closer, and then we also have our servicing department as well that manages the mortgages that is bilingual. Okay? Thank you so much for having us here.
So if you want to hold this key at closing day, call me, Keisha with the Keys, and we'll be yelling, "Enough!"